Hi everyone, welcome back to my channel. In today's class, we'll solve problem on output cost sheet. That is preparing the two cost sheet. One is current year cost sheet and the second one is estimated cost sheet. Let's start the problem number 2. The records of ABC Industry shows the following figures of expenses for the year ended 31st December 2016. Materials, opening stock on 1st January 2016, 20,000. So this is the opening stock balance 20,000. Purchases during the year 3 lakh. Closing stock of raw material that is on 31st December 2016, 60,000. Labor, okay, that is direct labor 80,000. Chargeable expenses, which is also called as direct charges 20,000. Works overhead, that is factory overhead, 60,000. Office expenses, or you can call administrative expenses, 30,000. Marketing expenses, that is selling and distribution expenses, 30,000. And sales amount is 5 lakh. The annual output was 2,000 units. Okay, during this period 2016, they have produced how many units? 2,000 units. The budget for the year 2017 provides production target of 1,500 units. Okay, in 2016 they have produced 2,000 units and in 2017 they are planning to prepare 1,500 units. Okay, the budget is for 1,500 units. Prepare a statement of estimated cost for 2017. The following information may be useful in this regard. Number one, labor cost may decline by 20%. Okay, in 2017, the labor cost will decrease by, that is, decline by 20%. Second, 40% of works overhead are variable. So in problem, works overhead amount they have given, that is 60,000. Of the 60,000, 40% we have to take as variable overhead and remaining 60% we have to take as fixed overhead. See in bracket fluctuate with the change in production. Okay, this variable overhead will fluctuate according to the production. Third one, 70% of marketing expenses are fixed. Marketing expenses amount is 30,000. Of this 30,000, 70% we have to take as fixed marketing expenses and remaining 30, okay, percent mean 100. So 70% we have to take as fixed marketing expenses and remaining, that is 30, from 100 minus 70, remaining is 30%. 30% we have to take as variable marketing expenses. Fourth one, fixed works overhead are expected to go up by 5,000 rupees. Okay, in 2017, fixed works overhead will increase by rupees 5,000. The last point is office expenses and fixed marketing expenses may increase by 25%. In 2017, office expenses and fixed marketing expenses will increase by 25%. In this problem, we have to prepare two cost sheets, that is cost sheet for the year 2016 and cost sheet for the year 2017, that is estimated cost sheet for 2017. Let's prepare the cost sheet for the year 2016. Heading, cost sheet for the year ended 31st December 2016. During this 2016, how many units they have produced? 2,000 units. So write here output 2,000 units. Columns, particulars, total cost and cost per unit. Okay, both we have to find out total cost and cost per unit. In this problem, they are asked to only find out the cost and not profit. Okay. So first, what we have to take? Opening stock of raw materials. Opening stock of raw material that is on 1st January 2016. Amount is 20,000. Write in solution. Opening stock of raw material, inner column 20,000. Next we have to add purchases of raw material. During this period, purchases amount is 3 lakh. Right here, 3 lakh. Add these two figures. 20,000 plus 3 lakh. And the total is 3 lakh 20,000. Next, less closing stock of raw materials. Closing stock of raw material that is 31st December 2016, 60,000. From this 3 lakh 20,000 minus 60,000 closing stock amount. The remaining balance is 2 lakh 60,000. Write in total cost column 2 lakh 60,000. So total direct material consumed amount is 2 lakh 60,000. Next we have to calculate cost per unit. That is direct material cost per unit. So how you will calculate this? Total cost amount that is 2 lakh 60,000 divided by number of units produced that is 2,000. Okay, to get the cost per unit, total cost divided by number of units produced. So direct material cost is there, total cost 2,60,000 divided by 2,000 and the answer is 130. So right here cost per unit column 130. To that right, direct material consumed. Total cost 2,60,000 and cost per unit is 130. Next we have to take direct expenses. Here in this problem they are given labor and chargeable expenses. So right here direct labor amount is 80,000. Total cost column 80,000 per unit 80,000 divided by 2,000 you will get 40 rupees. Okay, 80,000 divided by output 40. Next, chargeable expenses that is direct charges. Chargeable expenses amount is 20,000. Cost per unit 20,000 divided by 2,000 10 rupees. Okay, all the direct expenses, direct charges are over. Add these three amount 2,60,000 plus 80,000 plus 20,000 and the total is 3,60,000. Cost per unit 130 plus 40 plus 10 and the total is 180. This is prime cost. First important hit. Direct material cost plus direct labor and chargeable expenses. The total is called prime cost. After prime cost, we have to add factory overhead. Add factory overhead or works overhead. See the problem. Works overhead or factory overhead amount is 60,000. Okay, directly we should not write factory overhead 60,000 in total cost column because see the adjustment. Read the point number 2. ಸೊ ಪಾಯಿಂಟ್ ನಂಬರ್ 2 ದಲ್ಲಿ ಏನ್ ಹೇಳಿದ್ದಾರೆ 40% ಆಫ್ ವರ್ಕ್ಸ್ ಓವರ್ ಹೆಡ್ ಆರ್ ವೇರಿಯಬಲ್ ಓಕೆ ಆಫ್ ದಿಸ್ 60,000 40% we have to take as variable factory overhead and remaining 60%. Percent ಅಂದ್ರೆ ಎಷ್ಟಾಗುತ್ತೆ 100. Of this 100, 40% we have to take as variable fixed overhead and remaining 60. From 100 minus 40, remaining is 60%. 60% we have to take as fixed works overhead. So right here, add factory overhead. In that, first take fixed. Factory overhead amount is 60,000 into 60%. Or you can write first variable, okay. 60,000 into 60%, you will get 36,000. Cost per unit, 36,000 divided by 2,000, rupees 18. Variable, 60,000 is the factory overhead amount into 40%. And the amount is 24,000. Per unit, 24,000 divided by 2,000, rupees 12. Got all of you? Factory overhead amount is 60,000. Of this 60,000, 40% you have to take as variable overhead and remaining 60%. Okay. 60% of factory overhead you have to take as fixed factory overhead. Add these three amount, three that is prime cost amount and factory overhead amount. 3,60,000 plus 36,000 plus 24,000 and the total is 4,20,000. Cost per unit 180 plus 18 plus 12 and the total is 210. This is called works cost. Add administrative overhead or office overhead. Office expenses amount is 30,000. The administrative overhead will be fixed. Okay, right here. This is fixed. So amount ಎಷ್ಟಿದೆ 30,000. Total cost column 30,000 per unit 30,000 divided by 2,000. We will get 15. Add these two amounts works cost plus administrative overhead. 4,20,000 plus 30,000 total is 4,50,000. Cost per unit 210 plus 15. Total is 225. This is called cost of production. Add selling and distribution overhead. Marketing expenses. That is 30,000. Marketing expenses. So marketing expenses, read the third point. 70% of marketing expenses are fixed. Okay. 70% we have to take as fixed marketing expenses and remaining 30% from 100 minus 70, the remaining is 30% we have to take as variable marketing expenses. So marketing expenses amount is 30,000. 30,000 in a 70% now fixed marketing expenses ಅಂತ ತಗೊಳ್ಬೇಕು ಮತ್ತು remaining 30%, 30,000 into 30% we have to take as variable marketing expenses. So right here fixed marketing expenses amount is 30,000 into 70% and the amount is 21,000. Per unit 21,000 divided by 2,000. Okay, per unit ಬೇಕಂದ್ರೆ ಎಲ್ಲ amount ಗೆ total cost amount ಗೆ divided by 2000 ಮಾಡಬೇಕು. 21,000 divided by 2000 and you will get 10.50. Next variable 30,000 into 30% amount is 9,000. Per unit 9,000 divided by 2,000 answer is 4.50. Okay, all the items are over related to 2016 year. Okay, now just 2016 year related information ತಕೊಂಡು ಕಾಸ್ಟ್ ಶೀಟ್ ಅನ್ನ ಪ್ರಿಪೇರ್ ಮಾಡಿದ್ದೇವೆ. ರಿಮೈನಿಂಗ್ ಏನ್ ಇನ್ಫಾರ್ಮೇಶನ್ ಕೊಟ್ಟಿದ್ದಾರೆ, ಏನ್ ಅಡ್ಜಸ್ಟ್ಮೆಂಟ್ ಕೊಟ್ಟಿದ್ದಾರೆ, that is related to 2017 cost sheet. That is the estimated cost sheet for 2017. So all the items are over related to for the year 2016. Now add these three amount: cost of production amount plus selling and distribution overhead amount. 4,50,000 plus 21,000 plus 9,000 and the total is 4,80,000. Per unit 225 plus 10.50 plus 4.50 and the total is 240 rupees. This is called cost of sales or total cost. Cost of sales or total cost 4,80,000, cost per unit 240. Next is estimated cost sheet for the year 2017. You can write the heading estimated cost sheet for the year 2017. So during this period 2017 output is 1500 units mentioned in the problem. Columns are particulars. Here first we have to take cost per unit and then total cost. Okay, previous cost sheet ಅಲ್ಲಿ ನಾವೇನ್ ಮಾಡಿದ್ವಿ? First we have calculated total cost and cost per unit. In estimated cost sheet, first we have to take cost per unit and then total cost. So first item is information related to material. So 2017 related opening stock of raw material, closing stock of raw material ಏನು ಕೊಡ್ಲಿಲ್ಲ. So previous in cost sheet ಇದೆ. Previous cost sheet ಅನ್ನು refer ಮಾಡಿ we have to take the direct material or the raw material consumed during this period. Cost sheet for the year 2016. So just now we have prepared it. So direct material consumed during this period is total is 2,60,000 and cost per unit is 130. Okay. 2,60,000 rupees will not take because this is the total direct material cost of 2,000 units. And in this period, in 2017, the production is 1,500 units. So cost per unit, what we have written here, that value we have to take to prepare the estimated cost sheet for the year 2017. So direct material consumed cost per unit amount is 130. So right here direct material consumed cost per unit is 130. So to get the total cost amount, what we have to do? 1 unit direct material cost is 130. To get the total cost, what we have to do? 130 into 1,500 units. That is total output. ಅರ್ಥ ಆಯ್ತು? 1 ಯೂನಿಟಿನ ಕಾಸ್ಟ್ ಪರ್ ಯೂನಿಟ್ ಎಷ್ಟಾಗತ್ತೆ? ಡೈರೆಕ್ಟ್ ಮೆಟೀರಿಯಲ್ ಕನ್ಸ್ಯೂಮ್ 130. ಆ ತರ 1,500 ಯೂನಿಟ್ಸ್ ಅನ್ನ ಪ್ರಿಪೇರ್ ಮಾಡ್ಲಿಕ್ಕೆ ಡೈರೆಕ್ಟ್ ಮೆಟೀರಿಯಲ್ ಕಾಸ್ಟ್ ಎಷ್ಟಾಗತ್ತೆ ಅಂದ್ರೆ ನೀವೇನ್ ಮಾಡ್ಬೇಕು? ಮಲ್ಟಿಪ್ಲೈ 1,500 into 130 and the value will be 1,95,000. Okay, to prepare this estimated cost sheet, you have to refer the previous year cost sheet, that is cost per unit column and not total cost column. Cost per unit column we have to refer. So direct material consumed cost per unit is 130. To get the total cost, 130 into 1500 and the amount is 1,95,000. Next item is direct labor. Point number one. Labor cost may decline by 20%. Okay. For the period, okay, in this 2017, the labor cost will decline, means will decrease by 20%. So decrease by 20% means we have to minus 20%. Direct labor amount is there 40 less decrease. Okay, you have to calculate 20% on this 40. 40 into 20%. How much you'll get? 8. From this 40 minus 8, the remaining balance is 20, 32. So the long procedure agate. Directly we can calculate like this 40 minus 20%. We will get the direct answer, that is 32 rupees. Get the total cost. What we have to do? 32 into 1500 and the amount is 48,000. To get the total cost, you have to multiply, and to get the cost per unit, you have to divide it. Next is chargeable expenses. Per unit is rupees 10. No other adjustment. So directly write cost per unit column, chargeable expenses 10. Total cost 10 into 1500 and the amount is 15,000. So all these three items are over. Material, labor and chargeable expenses. Add this. 130 plus 32 plus 10 and the total is 172. Total cost 1,95,000 plus 48,000 plus 15,000 and the total is 2,58,000. This is called prime cost. Next we have to take add factory overhead. The overhead is divided into two parts, that is fixed and variable. For fixed factory overhead, you have to take the total cost value, and for variable factory overhead, you have to take the cost per unit value. Okay, fixed, either it is fixed factory overhead, fixed office overhead, or fixed selling and distribution overhead. For fixed overhead, you have to refer the total cost column, and for variable overhead, either it is factory variable overhead or marketing or selling and distribution variable overhead. For that, you have to refer cost per unit. So fixed factory overhead amount is 36,000. See the question. The point number 4. Fixed works overhead are expected to go up by 5,000. Okay, in this 2017, the fixed overhead will increase by rupees 5,000. So whatever the fixed overhead amount is there of previous year, that is 36,000. To that we have to add rupees 5,000. Expected to go up means it will increase by rupees 5,000. See the estimated cost sheet. Add factory overhead. Fixed. Previous 2017 fixed overhead amount is total cost. Amount is 36,000. To that write add increase. So during this 2017 there is an increase of rupees 5,000. Add this 5,000. 36,000 plus 5,000. Total is 41,000. Write in total cost column. 41,000. To get cost per unit, what you will do? 41,000 divided by 1,500. Okay, 41,000 divided by 1,500. And you will get 27.33. Next is variable. No adjustment regarding this variable factory overhead. So variable per cost per unit ಎಷ್ಟಿದೆ? Cost per unit is rupees 12. So write cost per unit column variable 12. To get total cost, 12 into 1,500 and the amount is 18,000. Add prime cost and factory overhead. 172 plus 27.33 plus 12 and the total is 211.33. Total cost 2,58,000 plus 41,000 plus 18,000 and the total is 3,17,000. This is works cost. Next, add administrative overhead. Administrative overhead, we have to think that it is fixed. Okay, it is administrative overhead is fixed in nature. So administrative overhead, see the total cost column, refer the total cost column. Office overhead ಎಷ್ಟಿದೆ amount 30,000. Here they have given adjustment related to this office overhead. See the problem. Read the point number 5, last point. Office expenses and fixed marketing expenses. Okay, this is related to next point. Office expenses and fixed marketing expenses will increase by 25%. So, for the year 2017, the office expenses will increase by 25%. So, previous year, administrative overhead amount is 30,000. Okay, you have to refer the total cost column. Total cost amount that is 30,000. And this year, 2017, it will go up by 25%. So, increase andre plus ಮಾಡಬೇಕು. So, 30,000 plus 25%. Okay, this is the direct calculation. Otherwise, you can go for like this. Labor ಅಲ್ಲಿ ನಾನು ಹೇಗೆ detail ಅಲ್ಲಿ explain ಮಾಡಿದ್ದೇನೆ ಆ ತರ. First, we have to take the administrative overhead amount that is 30,000, add, increase like that. This is a shortcut method. 30,000 plus 25%. It will increase. Increase means you have to take plus 25%. You will get direct answer that is 37,500. 30,000 plus 25% and the amount is 37,500. Cost per unit 37,500 divided by 1,500. 37,000 divided by 1,500, you will get 25 rupees. Add these two. 211.33 plus 25 and the total is 236.33 and total cost 3,17,000 plus 37,500 and the total is 3,54,500. This is cost of production. Add selling and distribution overhead. In that, marketing expenses. Marketing expenses are also classified into two parts, that is fixed and variable. Okay, fixed marketing, see this point number 5. Fixed marketing expenses will increase by 25%. Okay, we'll see the cost sheet for the year 2016. Okay, selling and distribution overhead under this marketing expenses fixed amount is, see the total cost column 21,000. So fixed right 21,000 and it will increase by 25%. Okay, see here I have showed you detailed calculation. Okay, in administrative overhead here directly I have calculated the value that is 30,000 plus increase 25%, you have got 37,500. Here for marketing expenses, I have shown detailed calculation. Okay, first you can write the fixed overhead amount, that is 21,000. Add increase. It is increased by 25%. So see the calculation. 21,000 into 25%, you will get 5,250. Add these two amounts. 21,000 plus 5,250, and the total is 26,250. Okay, this is a long calculation. Or directly you can do like this also. 21,000 plus 25%. You will get directly 26,250. Okay, this is a shortcut method. ಇಲ್ಲಾಂದ್ರೆ ನೀವು ಡಿಟೇಲ್ ಆಗಿ ಈ ತರ ಸಹ ಹೋಗ್ಬೋದು. ಮೊದಲು ಫಿಕ್ಸ್ಡ್ ಅಮೌಂಟ್ ಅನ್ನ ಬರೆದು ಅದಕ್ಕೆ ಇಂಟು 20%, 25% ಮಾಡಿ ಏನ್ ಅಮೌಂಟ್ ಬಂದಿದೆ ಅದಕ್ಕೆ ಆಡ್ ಮಾಡಿ ದೆನ್ ಯು ವಿಲ್ ಗೆಟ್ ದಿ ಫೈನಲ್ ಆನ್ಸರ್. ಅದರ್ವೈಸ್ ಡೈರೆಕ್ಟ್ ಆಗಿ ಏನ್ ಅಮೌಂಟ್ ಇದೆ ಒರಿಜಿನಲ್ ಅಮೌಂಟ್ ಅದಕ್ಕೆ ಪ್ಲಸ್ 25% ಮಾಡಿದ್ರೆ ಯು ವಿಲ್ ಗೆಟ್ 26,250. ಓಕೆ, ಎರಡು ಕ್ಯಾಲ್ಕುಲೇಷನ್ ಮಾಡ್ಕೊಂಡು ನೋಡ್ರಿ. So fixed marketing expenses total cost amount is 26,500. To get cost per unit, 26,250 divided by 1,500, and the cost per unit is 17.50. Next is variable. Directly write take the variable value cost per unit. See the cost per unit column 4.50. So write here 4.50 total cost. 4.50 into 1,500 will get 6,750. Add cost per unit column. 236.33 plus 17.50 plus 4.50, and the total is 258.33. Total cost 3,54,500 plus 26,250 plus 6,750, and the total is 3,87,500. That is cost of sales. I hope you got the solution. If you have any doubts, please write in comment box. Okay, output costing related, I have already solved many problems. You can check in playlist. Okay, in playlist we will find output costing folder. So there you get all the problems related to output costing and notes related to this topic. Please subscribe my channel and share with your friends. Thank you everyone.